right, welcome to Iron Financial. This is the place where we help you forge a stronger portfolio by cutting through all the market noise and weakness. I'm your lead analyst. Today, we are putting a giant of the mining royalty world, Franco-Nevada, directly into the microscope. They just dropped a Q4 earnings report that, on paper, looks like an absolute monster. So our job today is simple. We're going to determine if this company is built on a foundation of solid rock, or if we're starting to see some cracks in the structure that could bring the whole thing tumbling down. Let's get to it.
Okay, let's start with the first number that just jumps right off the page at you, an 86.1% year-over-year increase in their Q4 revenue. Now, let's be perfectly clear, that's not just good growth. That is an absolute explosion. We're talking about a company that went from pulling in about $321 million to almost $600 million in just one quarter compared to the year before. This is the kind of massive top-line number that screams pure structural strength. It's the raw horsepower that tells you the engine is firing on all cylinders. And it's the kind of performance that should, theoretically, launch a stock into a whole new orbit. This is heavy-duty stuff.
But look, as any smart investor knows, top-line revenue can be a bit of a mirage. You can buy revenue, you can get it with paper-thin margins, it can hide a lot of problems underneath. What really matters, what truly forges a powerful company, is profit. And this is where the story gets even better. We're looking at a 109.6% surge in net income. It more than doubled. That is pure, high-octane cash hitting the bottom line, going from $175 million to over $367 million. This is the incredible power of their royalty and streaming business model on full display. Think about it. They don't have to pay for the fuel, the giant trucks, or the geologists. They just collect a check. So when gold and silver prices are running hot, their margins expand like crazy. This is a profit furnace burning at peak efficiency.
Whoa, hold on a second. Peak efficiency? Launch a stock into orbit? The stock barely budged. Look at this number. You just laid out this incredible story. Revenue up almost 90%, profits more than doubling, and the market gives it a measly 1.72% bump? That isn't a rally. That's a polite little golf clap at a heavy metal concert. It makes no sense. For an earnings beat this massive, the market's reaction wasn't just muted. It was suspiciously quiet. It's like watching a fighter land a perfect knockout blow and the crowd just yawns. That kind of disconnect is a huge red flag for me. It tells me the really big money is looking right past these flashy headline numbers, and they're seeing something else, something they don't like at all.
And really, that's the whole ballgame right there. That's the central question we have to answer today. What is the market seeing that we aren't? Is there some kind of deep structural weakness here, a crack in the foundation that the big institutional funds have already sniffed out? Or, and this is the other side of the coin, is this a massive glaring opportunity that the rest of the herd is just completely missing? Are we standing on a hidden trapdoor that's about to spring open and send the stock plunging? Or are we looking at a tightly coiled spring, being held down by fear, just waiting to explode higher? We need to figure out which one it is.
Exactly right. So today isn't just a review, it's a full forensic audit of the company's structure. Here's how we're going to break it down. First, we'll dig into that puzzling market reaction. Then, we're going to pop the hood and inspect the revenue and profit engine itself. Make sure it's sound. After that, our skeptic is going to get his chance to stress test the balance sheet, looking for any and every crack in that foundation. From there, we'll track the cash and see how they're building for the future, analyze the huge Cobre Panama wildcard that's hanging over everything, and then finally, we will forge the Iron Financial verdict. It's time to put Franco-Nevada on the anvil and see what it's really made of. Let's get to work.
So, let's tackle this puzzle head-on. As the skeptic correctly pointed out, numbers this powerful should, in a normal world, send a stock soaring. The fact that Franco-Nevada basically flatlined tells us there is a major battle of narratives going on right now between the bulls and the bears. The bulls are laser-focused on these incredible earnings, but the bears are clearly looking at something else entirely, something they believe is a much bigger deal. We need to understand both sides of this fight. And you don't have to look far to see the proof of this division. It's right here in the institutional filings. This isn't just a minor disagreement. It is a heavyweight title fight. In one corner, you've got a true titan, like Capital World investors, dumping over a third of their position. We're talking about a $500 million exit. That's a massive vote of no confidence from some of the smartest money on the planet. But then, in the other corner, you have FMR, the parent company of Fidelity, stepping in and scooping up 2.5 million shares. And get a load of 1832 Asset Management. They nearly tripled their position. The pros are completely torn. There is zero consensus, which for an investor screams uncertainty and risk.
That's a fair point. But while the big funds might be split, let's look at the analysts, the people whose entire job is to build detailed financial models on this one company. And here, the verdict from Wall Street is a complete landslide. You've got RBC, UBS, Raymond James. They are all pounding the table with buy and outperform ratings.
But that's not even the most important piece of data here. The most important number on this entire slide is this one, 0. Not a single firm has a sell rating on the stock. Not one. That tells me that the people doing the deepest research believe the underlying structure here is fundamentally solid and that the market's hesitation right now is a huge miscalculation.
All right, let's move on from what the market thinks and get our hands dirty with the core of the bull case. It's time to pop the hood and really inspect the engine. Where did all this record-breaking performance actually come from? We need to get in there, understand the components, and see what's actually driving this financial machine forward. Let's see if it's running clean.
This table really tells the whole story, and it's crystal clear. Just look at that top line for precious metals. It's not just growth, it's a quantum leap. Revenue more than doubled, rocketing from $254 million to over $500 million. That was the engine. It was fueled by a perfect combination of record-high gold and silver prices and really strong production from some of their key assets. Now, compare that to the diversified line. That's their iron ore, oil, and gas royalties. That part of the business actually dipped a bit. But the key takeaway is that the performance from precious metals was so massive, so powerful, it completely papered over any weakness anywhere else and single-handedly carried the entire company to a record quarter.
And this chart just hammers that point home and makes it painfully simple. Forget the diversified part of their portfolio for a second, because right now, it's basically a rounding error. Franco-Nevada is first and foremost a precious metals powerhouse, plain and simple. When you add it all up, a full 90% of their revenue this quarter came from gold, silver, and platinum group metals. 71% from gold alone. So let's be absolutely clear. When you invest in FNV, you are making a highly leveraged, high-conviction bet on precious metals. It's a gold proxy, but without a lot of the direct operational risks of actually owning a mine. That is the fundamental structure you are buying.
And let's circle back to profitability for a second, because this is where this business model really shows its strength. I mean, just look at the massive gap between these two bars. That's an explosion in pure profit. They didn't just grow their revenue, they converted that revenue into cash with brutal, almost perfect efficiency. For every new dollar that came in the door from higher gold prices, a huge chunk of it dropped straight to the bottom line, completely untouched by operating costs. That's the magic of the royalty model. It's a superior, high-margin machine firing on all cylinders.
Okay. The income statement looks amazing, I'll give you that. It's beautiful. But top-line growth and fat margins are only half the story. That's the shiny paint job on the building. A company's true strength, its ability to last for the long haul, that's forged in the balance sheet, in the foundation. And when you start digging around in that foundation, you start to see some numbers that should make any serious investor take a long pause. You start to see some potential stress fractures, and we need to look at them very, very closely.
Now this is the slide that gives me heartburn. Look at this squeeze. On one side, you have their cash position, which has been cut by more than half. It's down a staggering 53.8% in 1 year. That's over $780 million that has just vanished from their bank account in 12 months. At the same time, on the other side of the ledger, their total liabilities have skyrocketed by over 81%. They've almost doubled. So let me repeat that. Cash is plummeting while their obligations are soaring. This brings up the single most important question you can ask. Where in the world did all that money go? Did they burn it or did they build something with it?
That is exactly the right question to be asking, and I've got the answer. The cash wasn't burned. It was deployed. Management took that massive river of cash they generated, and they immediately put it to work. They used it as the raw material to forge future growth. They didn't just let it sit around on the balance sheet earning next to nothing. They invested it, and they invested it aggressively to build out the next generation of their revenue streams. Let's follow the money trail.
Just look at what they've been doing since the year ended. This is where the cash went. This isn't just a random list of deals. This is a strategic acquisition campaign. They are methodically buying up future cash flow. A $40 million deal here, a $120 million royalty there, a massive $250 million deal in Nevada, another $100 million gold stream in Quebec. This isn't a sign of weakness at all. This is the sign of a confident management team executing a clear plan, aggressively putting money to work to build a stronger, more powerful foundation for the years ahead.
And here is the knockout punch that puts all those balance sheet concerns into perspective. Even after that massive spending spree, the company is still completely debt-free. And it's sitting on a war chest of $3.1 billion in available capital. That includes the cash they have left, their marketable securities, and a completely untouched credit facility. This is what we call a fortress balance sheet. That's the kind of financial firepower that allows them to keep raising their dividend, which, by the way, they've now done for 19 consecutive years. That doesn't happen by accident.
A fortress balance sheet is great, but every fortress has a potential weak point, a vulnerability. And for Franco-Nevada, that vulnerability has a name: Cobre Panama. This is the massive elephant in the room. We're talking about a world-class copper and gold project that is currently completely shut down because of political chaos and protests in Panama. This isn't some tiny little asset. This was supposed to be a cornerstone of their portfolio for decades to come. The deep uncertainty hanging over its future is, in my opinion, the #1 reason the market is so hesitant. It's the single biggest risk, but it's also the single biggest potential catalyst for the stock.
You're not wrong. It is the defining issue right now, but we're starting to see some glimmers of hope, some signs of a thaw. This quote from the CEO, Paul Brink, is critical. Now, I know this is corporate speak, so you have to read between the lines. He's pointing to the government's willingness to even talk about processing the ore that's already been mined as a positive step. Now, a positive step is not a done deal. But in the world of high-stakes international negotiations, it's a huge signal. It suggests that both sides are trying to find a practical way forward. Management is clearly optimistic that this is the first move in a much longer game.
And let's break down exactly what that potential looks like, because there are two very distinct catalysts here. Step 1 is the short-term win, just getting permission to process the ore that's already been mined and is sitting on the ground. That step alone could deliver over 23,000 ounces of gold and over 250,000 ounces of silver to Franco-Nevada's bottom line. And let me be clear, this step 1 potential is pure 100% upside. It is not in their guidance for 2026, it's not in the analyst models, it's a free option on thousands of ounces of gold. Then you have step 2, the long game, a full restart of the entire mine. That could eventually add between 150,000 and 175,000 gold equivalent ounces every single year. That would be an absolute game changer, representing a nearly 30% increase to their entire current production profile.
Okay, it is time. We've laid all the evidence out on the table. We've examined the record profits, the market's weird reaction, the stress on the balance sheet, the aggressive acquisitions, and that huge Cobre Panama wildcard. Now it's time to bring it all together and forge our final verdict. Is Franco-Nevada a solid cornerstone you can build a portfolio around, or is its foundation more fragile than it looks, a house of cards waiting for the wind to blow?
So the bull case is built on this incredibly powerful and proven structure. You have record-breaking financial results, driven by a high-margin business model that is just a cash-generating machine when metals prices are high. You have a management team that is taking that cash and aggressively reinvesting it to build out future growth. And then you have this massive lottery ticket-like potential catalyst from a Cobre Panama restart that nobody's pricing in. But the bear case focuses on the very clear signs of stress. That cash position is dropping like a rock while liabilities are climbing. You just can't ignore that trend. The company at its heart is a leveraged bet on commodity prices, which can be a brutal double-edged sword. And that Cobre Panama risk is not some far-off possibility. It is a dagger hanging over this entire investment right now.
So here's where we land. Here is our final synthesis. Franco-Nevada isn't a simple buy or sell. It's a very specific tool for a very specific job. It is a high-quality operator, one of the best in the world at what they do. And it offers you leveraged exposure to gold and silver prices without you having to take on the risk of actually owning and operating a mine. But, and this is the non-negotiable part, it requires that you, as the investor, have a high tolerance for two major things. First, you have to be okay with the balance sheet volatility that comes from their aggressive deal-making strategy. And second, you have to be willing to accept significant geopolitical risk that is tied to one massive key asset. If you can't stomach those risks, this isn't the investment for you.
So we leave you with that final question. Now that you've seen the evidence, now that we've stress-tested the structure, you have to decide for yourself. Is Franco-Nevada's foundation built on the solid rock of a best-in-class business model and a powerful growth engine? Or is it built on the shifting sands of balance sheet pressure and intense geopolitical uncertainty? The answer to that question will determine whether or not it has a place in your portfolio. Thanks for joining us at Iron Financial.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.